clean up this mess. We got to get rid of the IRS. Hey, hey.
Hello, welcome again to FairTax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. Still protesting.
Yeah.
Defund the IRS.
Because
Taxpayers matter.
that's right. Absolutely.
Let's do it. You can hold it now if you want to.
Oh, thank you.
Equal opportunity protesters here on FairTax Power Radio.
That's what I live for.
You live to protest? Well, at least you're protesting against the IRS. That works pretty well.
Yep. And in favor of all Americans.
Yes. And well, we have got, as usual, a jam-packed show here on FairTax Power Radio for this episode, but let's dig right into my favorite segment, the Congress.gov segment. And actually, Ron and folks, they're slowing down. We talk about how many hits you get if you put the search phrase Internal Revenue Code into the search function there on Congress.gov. Right now, if you do that and close those three words in quotes and hit it, and you'll get exactly 2,100 hits on that search. But we sort these things by chronological order as they're newly introduced. And since the last time we recorded, believe it or not,
2 weeks ago.
Yeah, 2 weeks ago, the last time we recorded, only 5 new bills have been introduced that come back on that search when you search on the Internal Revenue Code.
That's
of course,
good.
They're goodies. Yeah. So we probably won't have anything to spill over into next week like we did on the last two. But a couple of days ago, H.R. 8787, to amend the Internal Revenue Code to permit withdrawals from certain retirement plans for repayment of student loan debt and for other purposes. So the tax code tells you what you can, kind of retirement plan you can have, what you can do with that money, and I think they're talking about canceling student loan debt anyway. So
Yeah, but the thing that occurs to me, I haven't had student loan debt in many decades.
I've never had student loan debt, period.
So I did for a while. I was making payments there when I first got out of college and started teaching. But that debt was retired over 50 years ago. Yeah. So why would I need to draw from my retirement? Yeah, there are some retirement funds that you can't draw early. If you do, you get a penalty, okay? But I don't understand the connection between people about ready to retire and people with student loan debt.
Well, I guess they're saying if you they will let you draw from your retirement plan without penalty. It doesn't really say that in the description here. To permit withdrawals from certain retirement plans. I mean, I can't imagine the government can tell you it's your money, but I'm going to make you keep it in your account indefinitely. Don't you just love the heavy hand of Big Brother here?
Yeah.
Moving right along.
What else?
S. 4921. This is a bill to amend the Internal Revenue Code to allow a deduction for traveling expenses for federal disaster relief workers who are away from home for more than a year. Now, isn't travel expenses in the course of your work already deductible?
Yeah, I don't know about these special things here. I mean, yeah, for when my wife and I were over-the-road truckers, yeah, they have very specific rules for daily expenses, travel expenses, okay? But this is a different category.
Again,
if you're going to have an income tax, I can understand this. The thing is, we'd be a lot better off without the income tax, and then we wouldn't need this nonsense.
Again, there is no text associated with these. It takes a while to get the text published here. We just have to go by the description.
Yeah.
But allow a deduction for traveling expenses for disaster relief workers. Okay, moving right along, S4908, a bill to amend the Internal Revenue Code to provide a tax credit for taxpayers who remove lead-based hazards.
Oh.
No, you know what that means. They're coming after your ammo.
Lead-based. Yeah, it is kind of nebulous there.
That's lead-based and is definitely hazardous to anybody who tries to take my guns. But anyway, that's...
I mean, the first thing I thought of was paint.
Yeah.
And I thought we got rid of lead-based paint a long time ago, but you may be right because they've got that that text is so nebulous that nobody really knows what it means.
Mm-hmm.
What else we got?
You get a tax credit for removing lead-based hazards. And the last one, this is back to our favorite subject again.
Yeah.
H.R. 8743 to amend the Internal Revenue Code to make certain energy tax credits, here we go, fully refundable. Back to the refundable tax credits, which is just like a handout, which means even if you don't have a tax liability to apply the credit against, you just get the money anyway.
Yeah.
So fully refundable tax credits for energy tax credits, and to delay the tax credit phase down, and for other purposes. So whatever.
Yeah.
So I say they've slowed down a good bit. That's kind of all we've got from the last recording session.
Well, that's good, because the fewer proposals, the less they interfere with the daily American life. All right.
Yeah.
Although these are proposals, they're not actually law, but unfortunately, some of them will become law. Okay. Hopefully, not between now and the end of the year, which is only a few weeks.
Okay. Well, let's say there's not a whole lot of time left in this particular session of Congress, which means FairTax is probably going to die in committee again, like it always has.
Yeah.
But speaking of proposals, let me throw this in here real quick. There's a kind of an encouraging looking one coming out of the state of Mississippi.
Oh, this is good.
The governor there. Now, remember, of course, if you're not real good on geography, Mississippi is right next door to Alabama. And we've been talking a lot about what Alabama is looking to do.
And only one state away from Texas.
Yeah, Mississippi is kind of between Alabama and Texas, so that's right there. But the governor of Mississippi, without giving a whole lot of specifics, is just kind of tossing the idea out of getting rid of Mississippi's state income tax. Now, he has not gotten into any kind of specifics as to, what are we going to replace it with, or that it's just an idea in the back of his head. Well, all of these states, sounds like he looked around, all of these states around us don't have a state income tax, and we do, and so they're getting some of our business, and they want to get on the same bandwagon.
That's exactly, that's the point I was going to make, too, because in the write-up, he's saying, he's using governor language to say just what Bob said. Alabama's working on that, Texas already has it, Florida, a couple states over, already has, gotten rid of their income tax and have a sales tax. I think I see a trend here.
Well, it says the governor released budget recommendations that proposed eliminating Mississippi's income tax within the next decade. So he's leaving himself lots of time to play with it, and in a bid to attract more residents.
So
I imagine he wants more business as well.
We just got that report 2 days ago, before this recording session. We're recording this on Friday, November 20th, and that was brand new just a couple days ago. So that's very encouraging, because we mentioned in a previous, it was last week's episode, wasn't it, about Alabama, Georgia, Nebraska, and so forth, and the steps they're taking.
Try to give updates on what we knew was in place, and of course the pandemic has thrown a monkey wrench into some of those plans, and Alabama is going to reboot their effort and try again next session. They have to find a different sponsor for it.
But it's good that another state is looking at this.
Georgia's having to kind of rewrite their bill a little bit, but they're going to be moving forward with it, and hopefully Mississippi will join them.
Yeah, that would be good. And they can take advantage of what Alabama and Georgia have been doing, if their people talking, because it's a lot of work. As we mentioned last week, it's a lot of work to get your legislature to throw out your income tax, your state income tax, and replace it with a sales tax.
So if you're in Mississippi, if you don't, I don't know if there's a state organization in Mississippi. I would imagine so.
I should have looked that up, and I forgot.
Let's if you live in that state, let's get involved with that effort. And the more income taxes we can get rid of, the better. We'll eventually get rid of the federal income tax.
And the Americans for Fair Taxation are right there to help these folks in Mississippi in their quest to rid themselves of the income tax.
All right, I'll give you a choice: Grassroots Corner or viewer comments.
Let's do the viewer comments. All right. We've got a couple of...
We do like to acknowledge the people that communicate with us here at FairTax Power Radio, either with our email address, thefairtaxguys@gmail.com, or leave us notes on our Facebook page, or leave comments on the YouTube videos.
Yeah.
And we got a couple of really nice ones here.
Yeah.
Go with Frank Gilbert first. Here.
Okay.
This was left on a YouTube video.
Frank Gilbert is a common viewer of our shows, a frequent viewer. And a couple shows ago on number 238, Certainty versus Uncertainty, on YouTube, he left a comment. I love that you guys are standing firm. Those of us who doubt the ability of the people to vote in the FairTax supporters are in constant need of these pep talks. So, and that's what we do.
Yeah, we're working on it. But thanks, Frank. We appreciate that.
We will get this done.
Now, this one came out in this past stream that I thought was really good from Cindy Whitten. She says that with everyone paying into a sales tax system, there's absolutely no reason it should be that high, referring to the 23% fair tax rate. 10% should be plenty if the government would quit wasting our money. That sounds like the Ray Stevens song. If 10% is good enough for Jesus, it ought to be enough for Uncle Sam. There's a Ray Stevens song to that effect.
And this was a comment during our Facebook stream. So this was, I want to mention again, when we streamed to Facebook Tuesday night, even though the show is pre-recorded, the comments are live. And so Randy was able to respond to her, and several people responded to her. Randy's response, of course, Randy's very knowledgeable about this. By law, a new tax replacement has to raise the same revenue as the taxes replaced. That's why we say the fair tax is revenue neutral. It doesn't increase or decrease the revenue to the government, okay? To provide a monthly refund, which takes a certain amount of funds, to make the sales tax less regressive, and to cover the interest on debt, Social Security, and Medicare, and defense, is a registered rate of 23 cents for each dollar spent. But prices will go down because it's going to be easier for businesses to conduct their business and less expensive. So prices will go down and the fair tax will be added. So it's not going to go up 23%. There's going to be a little give and take there. All right. Also, your effective tax burden on spending money above the poverty level is only 8 to 9% for a family of 4 spending $50,000 because the prebate gets in there. All right. And that reduces your effective tax rate.
People see the 23 and they freak and they don't realize that your taxes on the spending up to the poverty level are completely refunded to you. You pay nothing out of your pocket until your spending rises above the poverty level. And for most working class folks, when you figure it out, even though you're paying 23% on every purchase, but you're getting reimbursed with a prebate, your out-of-pocket tax rate is, 10% or less for most folks.
Yeah. And you get your whole paycheck. You get the prebate, everybody will be better off under the fair tax. The numbers prove
But the rate is 23% instead of 10 simply because the economists that put this together determined that's what it would take to raise the same amount of revenue that the income taxes do.
I was just going to ask you that.
Yeah, she touches on one other thing right here in bold capital letters. The government needs to quit wasting our money.
Well,
as we have said here on FairTax Power Radio many times, that is beyond the scope of the fair tax. How the government spends it, how much they spend, what they spend it on, you still have to have that debate.
As individuals, we agree. I'm not happy with the way the government spends our money. There is a lot of waste and fraud and so forth, and I think the rate could come down. But as Bob said, that's another issue.
The purpose of the fair tax is just to raise the same amount of money that we're getting now, and the debate on how to spend it and whether we're spending too much and what to spend it on, that is beyond the scope of the fair tax.
But Cindy, we're glad that you tuned into the live stream of FairTax Power Radio Tuesday, and we hope to see you back every Tuesday. These comments are valuable because when somebody is new to the fair tax and they don't have, they're not quite sure of the particulars, that's a teachable moment for us. So
it is.
We appreciate it.
All right. So again, if you'd like to leave us comments, you can leave it on our Facebook page. You can send it to our email address, thefairtaxguys@gmail.com. Or, of course, join us when these things stream live on Facebook. And they stream on other platforms as well, the Parler and Rumble. I don't know where all you put it.
Yeah.
But
okay, time is moving along here.
Yes,
so
it is.
Let's because we do have a subject we plan to get to, but very quickly, the Grassroots Corner. Jim Bennett is the Grassroots Director for the AFFT. If you have something of the grassroots nature or you have a question or whatever, you can contact him at jim.bennett@fairtax.org. And Bennett has 2 N's and 2 T's. This one is the Grassroots Corner for November 20th. Meet New Jersey Trooper Victor Alberghini. Alberighi, okay, Alberighi. All right, now he's not a trooper. What he's used in the term that this guy is a real trooper when it comes to promoting the fair tax. And
so he's not going to pull you over and give you a ticket.
So you need to go read this. Sign up on FAIRtax.org. Give them your contact information, and then you'll get the weekly Grassroots Corner, and you'll get Steve Hayes' chairman's report, and you'll get a short email from the FAIRtax Guys about what's going to be on FairTax Power Radio for the week. This stuff is good, and it helps you keep up with it. But this man, Victor, he now lives in New Jersey. He used to live out near Scranton, so he's talking to people in Scranton about getting a fair tax cell going and so forth, while he's also working in New Jersey and getting this going. And he's got paragraphs here on all the stuff this guy is doing. It's amazing. What a great volunteer. All right. So I encourage you to go read that along with Steve Hayes' chairman's report. All right, this one also for November 20, how taxes affect your life. Now, well, I know how taxes affect my life.
Well, you think you know how much. Yeah, it's amazing how much.
You need to read this report.
How much it's costing you that you don't realize.
Yeah, it's pretty amazing. It's quite an eye-opener, as it usually is with Steve, because he takes a particular subject about taxation and drills down deep into it. Okay. After all, he is a recovering tax attorney.
It is. We got to get moving. Time is getting away from us really quick. And as we speak, as we're recording this, technically the results of the presidential election are still up in the air. The president has not conceded. He's got a legal team that is claiming to have enough evidence to overturn everything, but nobody's seen anything yet. So until and unless that happens, we're going to have to proceed on the assumption that Joe Biden will be the next president of the United States. And as such, on that assumption, let's look at what his tax proposals are and what they're going to do to you.
Yep.
And when you won't hear them all, you will want to repeal the entire mess and replace it with a fair tax.
Yeah, because Mr. Biden has been in Washington a long time, and like a lot of the people who have been in Washington a long time on both sides of the aisle, they depend on the tax code for everything. I mean, I'm surprised they don't have a proposal for a tax proposal to start their coffee maker in the morning, because they want the tax proposal, the tax code, to solve every problem you could possibly think of. All right. So, Mr. Biden, if you've been paying any attention to the politics of the election, you know that he wants to raise taxes on individuals with income of above $400,000. Okay, now I'm getting my information from the Tax Foundation. Okay, great website. You go to the Tax Foundation and put in Biden tax plan, and boom, there it is. Okay. Now, Biden's plan would raise tax revenues by $3.3 trillion over the next decade on a conventional basis. What do they mean by that? Conventional basis.
That probably means they do not take into account the changes in behavior that particular policy is going to trigger.
Yeah, when accounting for microeconomic feedback effects, the plan would actually collect about $2.8 trillion over the next decade.
If you start raising people's taxes, they're going to be looking for ways to avoid as much as they can. They'll probably kick the evasion back up as well. There is a difference between avoidance and evasion we've touched on, but both will be triggered by higher taxes.
Higher taxes do affect people's behavior.
Yeah, but what happens if a guy that's making over $400,000 happens to be your landlord? What happens to your rent?
Yeah, and we're going to talk about that because, renting out an apartment or whatever is a business, all right? And so let's see, a little bit more on Biden's plans. According to the Tax Foundation's General Equilibrium Model, the Biden tax plan would reduce GDP by 1.62%. You never want to reduce GDP. But unfortunately, increased taxes would do that. And it also says that by 2030, it would lead to about a 7.7% less after-tax income on the top 1% of taxpayers. But get this, and about a 1.9% decline in after-tax income for all taxpayers on average, even though they claim that it's only going to be for...
We're only going to target this at other people, not you, so you can support it.
Yeah.
But we're targeting it at the people that own the businesses you work for. We're targeting this at the people that own the house you live in if you're renting it and stuff like that. So all of this stuff just is going to come all the way back down the line. Don't think for an instant that it's not going to affect just about every single American in the country, one way or another, and it won't be for the good.
And part of the plan also involves raising the corporate tax. Okay?
Yeah, that's the killer, because every bit of that can get passed on to individuals, be it customers or shareholders or employees.
What are you talking about? Corporations need to pay their fair share.
Oh, bull hockey. I just about said something I shouldn't have. But anyway.
Yeah, this is a family show.
Yes, I know. But corporations, tax liability and the compliance costs that we're going to talk about in the next show are just costs of doing business. They get passed on to their customers in the form of higher prices. They get passed on to their shareholders in the form of lower stock dividends if it's a publicly held company. That gets passed on to their employees in less generous benefits and lower salaries. Individuals will pay every penny of that increased corporate tax.
And what we're talking about right now is in Chapter 3 of the White Book. Okay, I encourage you to review that or read it if you haven't read it. Bob is absolutely right. A corporation has a certain set of expenses. There's money coming in from either the product or the service that they sell, and there's money going out. All right, if they're making, let's say it's a company that makes windows.
Yeah.
Okay. They've got to buy framing material. They've got to buy glass. They've got to have a facility to put the machines in there. They've got to hire people. They got to have clerical help. They got to buy computers. All those expenses go into making the windows that they're then selling to the consumer.
Yes.
Okay.
And what happens when the cost of glass and the cost of framing material and the cost of all these other things goes up?
Yeah.
The price of that goes up. People see that right away.
And if they're in a very competitive market and they can't raise the price, then they have to cut expenses somewhere. Okay,
Pink slips.
Yeah. Well, some people say, well, they make so much in profit. They don't make that much in profit. And plus, if they don't make a profit, there's no business. There's no purpose for the business to be open. All right. If they can't make a profit to pay everybody and so forth and pay the shareholders, the business will shut down. So it's not that simple. And like Bob said, when the costs to a business increase, it's people that pay for it every time. Yeah. There are no exceptions.
And it's the cost of materials. It can be the cost of labor, or it can be the cost of taxes that get put on you. And we're not trying to beat so much on Joe Biden as we are about on the system that allows all this to happen.
That's right. All right.
So
Mr. Biden would be wise if he looked into the fair tax plan, because then if he wanted to, if there was a particular initiative that he and the Congress thought that was very, very important and they want to go forward with it, well, they could raise the fair tax like 0.5% or 1% or something like that, okay? Which would be a lot easier than all this other nonsense. But like I said, people who've been in Washington a long time just love the income tax because they love playing with it.
When you have a system that lets these tax costs be passed on to others, it will be.
Yeah.
Under the fair tax, that doesn't happen. The fair tax does not tax business-to-business purchases. If you're not in a retail business, you're not taxed at all. If you are in the retail business, you collect the tax from your customers, remit it to the state. Individuals pay the fair tax at the cash register every time they buy things without all this other complicated stuff.
Yeah, and the other aspect of this is that, okay, well, like Bob said, we're assuming that Joe Biden is going to be the next president. We don't know yet. So that means businesses right now are not sure what's going to happen next year. All right, there's this question mark hanging over them, this ambivalence. How do they plan? Well, they can't plan.
Yeah.
Because they don't know if the tax, if Trump is going to be president and the tax plan will stay level, he already reduced the tax rates, or if Mr. Biden is going to get in and raise taxes, because not only is he planning on raising taxes on individuals, but corporations too.
That means he's planning to drive corporations offshore.
Yeah, it will. It will. I mean, all those other problems. So, the age-old answer to these questions questions of how you fund all the programs you want to bring about, it hasn't changed. I mean, as long as there's an income tax, you're going to have problems when you just assume that raising taxes will bring in more money. Okay. And several presidents have found out that when they lower taxes, they actually bring more money into the government. Which,
because
I don't know why some people can't.
The increased economic activity that is spurred on by lower taxes means your actual dollar amounts go up even though the rates go down.
Yeah.
And you would think that educated people could figure that out, but I guess there are just too many ideologues out there that are more interested.
Because it happened with Reagan, it happened with John F. Kennedy, and it's happened with Trump. Lowering taxes has spurred economic activity and has increased the flows to the coffers. Of course, recently the spending is out of control because of the COVID-19.
Well, let's just hope that by our next recording session that we have some more clarity on the election here and we can figure out. But either way, whether Trump successfully defends himself or whether Biden gets in, we need to get rid of the income tax.
Yep, absolutely.
And, hopefully that we can convince our politicians that that's what we need to do. It would spur incredible growth in the economy, and we're about out of time again. Mercy, that was fun. Time flies when you're having it done.
I can't believe the time was almost up, but anyways.
There is a lot more to this that we've been able to touch on, so go to the Tax Foundation website and check it out and read it for yourself. And when you say, I've had enough of this garbage, join us at FairTax.org and get rid of it all.
Yeah, because it really will straighten out the tax mess in this country. Mm-hmm. Okay, we encourage you, as we already did, join AFFT. You can go to FairTax.org. That is the national organization. And while you're on that website, take a look and see who is in charge of the state organization, because I believe most states have some kind of an organization, and maybe you can get involved in that.
Hopefully Mississippi's got one and we can check this out. But as Steve Hayes says at the end of his chairman's reports, go there to FairTax.org. Look at the whiteboards. They're little short animations, couple of minutes each, that explain how it works. And if you like it, join us.
Yeah, that's right. Yeah, we could use your help. Okay. Let's see. Oh, the new store. All right. You know, that you can get hats and shirts. You can get campaign buttons like this. All right. We call these the pre-baked cards and the palm cards. All these things are at FairTaxStore.org. FairTaxStore.org. Go there, check out some things, purchase something, and demonstrate your support for the fair tax so other people know. And if they don't know about the fair tax, maybe it'll start a conversation and you can steer somebody else towards this.
Share our videos, steer family and friends to FairTax Power Radio.
Yep, and we're on lots of social media, all right? Facebook, Twitter, YouTube, Parler, Gab, Instagram, and pretty soon the FAIRtax Guys are going to be on something called MeWe.
Oh, okay.
Yep. Not yet, but we're going to get there.
We're working on it. But I tell you what,
our podcast, you can download our podcast to your smartphone or whatever and take it with you wherever you go.
That's all the time you got.
Oh. Okay.
Thanks again so much for watching and listening. I'm Bob Paxton.
And I'm Ron Molero.
The FairTax Guys reminding you the fair tax is the only truly fair tax. And once you understand it,
you'll demand it.
The fair tax does not hurt the poor and does not reward the rich because it's not a straight sales tax like the sales tax we already have. The fair tax creates a level playing field by taxing everyone at the same rate at the cash register, but untaxes the household up to poverty level. This means that those living closer to the poverty level pay a lower overall tax rate, while those living a lavish lifestyle pay a higher overall tax rate. Yet the law still applies to everyone equally. This is called the prebate, which reimburses every legal American household the taxes they will have to pay on the basic necessities each month. As those basic necessities vary by household, the fair tax untaxes you and not the purchases. This keeps tax lobbyists out of the picture and keeps you in control of what you pay. Do you think the prebate will be too expensive and act just like a huge welfare program? The prebate will cost less than half of what the current deductions and exemptions cost and operates just like the standard deduction you already take. It's your money. You're just getting it back each month rather than once a year. Everyone under the fair tax controls their own tax rate by deciding when and how much money they spend above poverty level, and thus how much they pay in taxes. To learn more, please visit FairTax.org and be sure to like us on social media to help educate your friends and spread the word.